Hello guys, and welcome to Daily Market Movements. Welcome to today's episode where we're going to be analyzing the NASDAQ 100 price chart, and then shortly after we will be heading over to the S&P 500 just to have a look at what happened there during the past week. Of course, I posted a video yesterday morning ahead of the open where I kind of discussed what could potentially happen here. And of course, on Thursday, we had a very positive trading session. At one point, we were trading 2% towards the upside. And then in the final couple of hours of trading, we then turned around and we actually ended the day down 1%. And then we were roughly trading around down 1% heading into the pre-market yesterday. And I said during yesterday's video that, there's always the potential that we could actually finish the day in a green, and that would actually be very positive because that could potentially take us above the 200-day EMA. Now, unfortunately, that didn't happen. We actually had some more selling going into the final hour, and that's something that I've been keeping a key eye out on in the NASDAQ 100 these past couple of days, is the volume of selling and the volume of buying. Now, we have had several occasions throughout this week where we've attempted to buy the dip, but unfortunately the sellers have just come back and taken control of this market, and we've now made some key developments here for the NASDAQ 100. So let's just quickly have a look how far we are off the all-time high. We're down around 14%, so 14.20% since those all-time highs that we achieved back in November. So we are now in correction territory. Anything over 10% is correction, and then of course if we go past 20%, that's then seen as being a bear market. But I don't believe that we will go into a bear market due to the fact we are not in a recession. The economy is actually booming at this moment in time. It's just because rates are on the up. We've had the Fed come out and say that they're going to be a lot more hawkish with regards to hiking rates, and the money that's currently getting injected into the financial markets will start to be tapered. So this shouldn't be seen as a bad thing. This is actually very good. This means that the economy is now strong enough to stand on its own 2 feet. So therefore, I do not believe we will go into a bear market here for the NASDAQ 100. I want to show you a quick chart that I found yesterday night whilst doing some research, and I think it's really beneficial for you all to see. So this here is the data of the stock market from 1928 all the way through to 2021. Now, this is actually dedicated to the S&P 500, not the NASDAQ 100. And it clearly shows that 5% of the years between 1928 and 2021, we have seen 95% of those years we have seen a 5% correction or worse. So that's pretty much 5% to 10%. And the S&P 500, if we go over and have a look at the S&P 500 at this moment in time, let's just see how far we are off those all-time highs. So we're down around 8.67%. So at this moment in time, this is where we are with 5% or worse, and 95% of the years between 1928 and 2021, so nearly 100 years, we have fallen 5% or worse. 95%, that's huge. And even if we were to go a little bit lower and we were to go and register for 10% or worse, still more than half of the years between 1928 and 2021, we have fallen 10% or worse. And that goes for the NASDAQ 100. The NASDAQ 100 would be in this criteria where we've fallen now 14%. We're not yet considered to be a bear market, but as you can see, only 26% of the years between 1928 and 2021, we have fallen 20% or more. And I see many posts yesterday in the markets basically where very well-known investors have come out, and there was one, for example, yesterday where an analyst come out and has just predicted a 45% decline in the S&P 500. Now, this is very typical. You tend to get a lot of the top dogs on Wall Street come out during times like this to spook investors and say, this could be it. We're about to have a massive bubble. It's about to pop. This happens all the time. And I actually looked at this as a good thing. This is a positive, because what these investors actually try and do is try and spook the retail investors, the people like me and you. And of course, that then scares us into closing and selling our positions, and then that just gives an even more value for the big guys to come in. The guys with all the money and capital, and then that's when you tend to see massive buying pressure come in. So the fact that we're already starting to see these big investors come out and say, well, yes, we think that there's a 30 to 45% decline coming here for the S&P 500. This should be seen as a massive positive. You hear it all the time, so don't be too spooked by these news announcements. But I thought I'll just come on and show you this chart because it's very, very helpful. At this moment in time, there's a lot of fear in the market. Many investors have probably had margin calls, especially if you're trading on leverage. I'm sure many of your portfolios are down 30, 40%. And at this moment in time, it is very, very scary. It makes you feel sick. I get it. that's me as well. But it's very important to understand to stay invested. If you're a leverage trader, then of course it's slightly different. But if you're non-leveraged, stay invested, because the likelihood is we will bounce from here. And that's what I'm going to be going on to tell you about now with regards to the NASDAQ 100. Now, the NASDAQ 100, one very bearish development that we've had in the market this week is that we've now just gone ahead and broken below that 200-day EMA. And now, for those who do not know, the 200-day EMA has acted as such a key level of support over the past 18 months. In fact, we haven't broken below it since March 2020 when COVID first came out. But the fact that we've now broken below it, of course, does point to closes below. And if we look at the NASDAQ 100 on the weekly, this is very important as well to see. We've now just had that daily close below the 50-day EMA. But the good news for the NASDAQ 100, I'm also going to state the positives as well as the negatives. Let's get rid of that. The good news is that we are now considered to be extremely oversold on the RSI. The RSI is now coming up with a reading of 26.69, and for those who do not know, anything below 30 on the RSI is telling us that we're oversold. And every occasion when we've been this oversold before on the NASDAQ 100, what tends to happen where we see a massive rally towards the overbought territory. So I am very, very bullish. This seems to be a very common theme here for the NASDAQ 100. We touch the oversold territory and we bounce back very strongly to go and achieve 70 on the RSI. And of course, if that was to be the case here, that would pretty likely take us up towards a 50-day EMA. Am I saying that that's going to happen for sure this time? Of course not. But what I am just showing you and presenting to you is the data, the historic data for the NASDAQ 100. So hopefully that can happen going into next week. But of course, we didn't see the buying into the final hour of yesterday's trading session, which is very unfortunate. That does scare me a little bit, but at the same time, I do see this being a fantastic buying opportunity, especially with the RSI being as low as what it is. And also, guys, I just wanted to use this, use this time to basically tell you guys that at this moment in time, interest rates are still at 0%. We still have negative rates. We still have money being injected on a monthly basis into the financial markets. And next week is a very important week due to the fact we have Jerome Powell speaking in the Fed minutes. This is going to be a key catalyst as to where the markets go next, and I personally think it's going to be extremely bullish. We've had JP Morgan and Goldman Sachs come out 2 weeks ago and say that they personally see anywhere between 4 to 5 interest rate hikes going into 2022. Okay, Jerome Powell has never hinted at that. 4 to 5 interest rate hikes this year. That is solely Goldman Sachs and JP Morgan coming out and stating that they can see 4 to 5 interest rate hikes. Shortly after, we had a key survey done by many analysts on Wall Street, and apparently the figures showed that many of them do favor 4 to 5 interest rate hike going into 2022. But that being said, I don't believe that we will hike 4 or 5 times. I still believe we will only hike 3 times. I stand by that. And if that is the case, then when Jerome Powell comes out on Wednesday and speaks in his conference, he will probably strike a very dovish tone if he does come out and say, hang on a minute, who's mentioned 4 or 5 interest rate hikes? We're going to take it step by step. We're going to try and hike 3 times, and then we will take it from there. That will then come across as very dovish, and that could be the catalyst for the huge bounce next week. And that is something that, of course, I don't have a crystal ball. Your guess is as good as mine. But I personally, in my opinion, and this isn't financial advice, I'm just sharing with you my opinion. My opinion is that next week we are going to get a nice, big, strong bounce due to the fact we are oversold in most markets at this moment in time. And I do believe Jerome Powell will come out to try and stabilize and calm things down, but by saying, hang on a minute, who's mentioned 4 to 5 interest rate hikes? We're still going to aim for 3, and of course commence the acceleration of the tapering process, which will of course end in March. But of course, that meeting is on Wednesday. What happens on Monday and Tuesday, your guess is as good as mine. Hopefully the markets can start to stabilize, perhaps maybe trade quite flat going into Wednesday, as it will be a key catalyst as to where these markets go next. But it's been a horrendous week, guys. We're down 7% for the NASDAQ 100. We're down 14%. It's been very, very hard to navigate these markets, especially when we've had several attempts to try and, buy the dip. But of course, the sellers have come back in. So this is just a message to all the retail traders out there. Please be very, very careful. Please use an appropriate risk management strategy. This is something that I do teach over in my streaming service, and of course, my I myself have been sending all my my personal trades out to my Signal team. This is something that you gain access to once you subscribe to the streaming service over on dailymarketmovements.com. And as I'll explain at the end of today's video, how to join part of our team. But please be very, very cautious as we go into a new trading week. But yeah, I just want to finish this video by saying that I do anticipate for there to be a very strong bounce going into next week. And that is going to wrap it up for today's video. But just before I let you leave, I just want to quickly show you our brand new streaming service. We've recently launched this website that you can see in front of you. This is where we provide in-depth analysis videos as well as trading signals via our Telegram group chat. Once subscribed, you'll then have access to all of our in-depth analysis videos as well as access to our private Telegram group chat. We cover various markets such as commodities, US stocks, indices, and cryptocurrencies. We also have a video category where we provide educational content so that you can improve your trading skills. If this sounds appealing to you, then you can find our website link in the description of this YouTube video at dailymarketmovements.com. If not, then I would just like to take this time to say thank you for watching today's YouTube video. Please give my channel a subscribe and give this video a thumbs up. Thank you very much, and I hope to see you again soon.